The banking industry has had a rocky week as Silicon Valley Bank, the second biggest bank collapse in U.S. history, fell apart due to a run on deposits. To prevent a domino effect, regulators have taken emergency measures, including seizing another bank, to ease fears of depositors withdrawing their funds. Wall Street Journal banking reporter Rachel Ensign shares the intriguing details of this unfolding crisis and speculates on what may occur in the days to come. Silicon Valley Bank saw an incredible surge in deposits during the pandemic. Their deposits tripled. They wisely invested some of these deposits in securities, which are generally considered a safe bet. However, when the Federal Reserve started to raise rates, some underlying issues began to emerge. The value of the bonds held by the bank fell, causing some depositors to flee. Unfortunately, the bank was forced to sell their bonds at a big loss. This just goes to show that even the mighty can fall when market conditions change. It started with a simple announcement from the bank, but in a matter of hours, chaos ensued. Investors panicked, sending the stock plummeting. And things only got worse as customers caught wind of the situation, sparking a frenzied rush to withdraw billions of dollars, around $42 billion in deposits just in that one day. By the time regulators stepped in, it was too late, and the bank was officially seized. It's a cautionary tale about the power of panic and the fragility of our financial systems. With the recent bank failure causing panic among regulators and the public, the Fed has swooped in with a plan to save the day. They're offering a lending facility as a backstop and ensuring all of the deposits of the failed bank, hoping to quell fears and prevent a domino effect on the rest of the banking system. The stakes are high, as the potential economic impact could be far-reaching. But with the Fed stepping in, there's hope yet for a happy ending to this financial drama. Last week saw some major developments in the banking industry, with investors being particularly concerned about the fate of certain institutions. One of the most significant events was the seizure of Signature Bank, based in New York, which marks the third largest bank failure in U.S. history. However, there was also some hope provided by First Republic, who announced that they had received extra support from the Federal Reserve and J.P. Morgan. As we move forward, the big question is whether the panic will continue, or if investors and customers will be reassured by these actions. Ultimately, the fate of these banks will depend on whether people continue to pull their money out or not. Make sure to subscribe to our channel The Financial Leap for more content.